What is going on, traders? Welcome back to the Traveling Trader. As you know, the next few weeks are very pivotal for the markets. There's a lot to be revealed in the way of policy, whether we're talking about the infrastructure bill, the vote to raise the debt ceiling or at least suspend it, avoiding a government shutdown, whether the Fed should start tapering or not, when they should raise interest rates. All of these things are of course set to affect the market in the short term. And yet we have corrupt Federal Reserve members like these two here, Federal Reserve member Robert Kaplan and Eric Rosengren, both resigning after it was revealed that they were conducting insider trading at a time when monetary policy was being discussed and decided upon. Realize I didn't say the word accused. Supposedly they committed no crimes. And if you're a fan of this channel, you know that I think the greatest trader in the game is Nancy Pelosi, who is worth a cool $115 million. Now, why do I bring this up? Well, apart from wanting to shed light on something that I think should be illegal, think about this from a money-making standpoint. If the ones that are setting policy, or at least the ones that are closest to those who are setting policy, if they're investing heavily into certain things at a certain time, then we should know exactly what they're investing in, because logic states that if we follow their trades, we'll make money too. Lucky for you, I'm going to show you a couple of resources of how to track these insider trades. But after I show you that, I'll leave all the links in the description as well. Then we'll get into some of the updates on these policies and how I'm playing these events in my stock and options portfolios. All right, before I get into this, it's an obvious caveat that just because they're trading this doesn't mean that if you do, you will automatically make money. However, knowledge is power, and I would rather have some light shed on this than be kept in the dark. Also, I backtested some politicians' trades, like I mentioned Nancy Pelosi. If you backtested all of her trades from this year, she made an exorbitant amount of money. If you traded everything that she did this year, you would have at least doubled your portfolio. All right, so the first site that I go to is smartinsider.com. Over here, you can actually search by politician. You can search for a politician's name like Pelosi, or you can filter by stock. As you can see here, right after Nvidia stock split, she bought a shit ton of calls. She also exercised a lot of options on Google. She bought a crap ton of Amazon. However, if you scroll down to the bottom here, you can see what are the most bought stocks in the last 60 days. Now, here's what I think is interesting. As inflation is having an exponential effect on energy and oil, you can see that the most traded stocks in the last 60 days, Shell Midstream Partners, which is obviously an oil company, Enable Midstream Partners is a natural gas company, Energy Transfer, Phillips 66, Suburban Propane. This is definitely not a coincidence. Okay, the second resource that I look at is Quiver Quant. You can actually look at it isolated between what House members are trading and what Senate members are trading as well. Now, assuming this information is up to date, what I find really curious is that there aren't a ton of purchases recently. You guys know that I talked about that September 17th date. I did a whole video about it here, about how there was an expected downturn in the market due to previous events as well as what was in the news at the moment. And you don't see a ton of purchases after that date, so I find that extremely curious. I'm not saying there's anything nefarious going on, but I definitely have to comb through more data in order to make a fair conclusion. All right, the other resource that I will have you look at is app.capitaltrades.com. Again, I will leave all of these links in the description, but this is more of the same thing where you can look at each of the purchases made by which politician. Again, we're seeing a ton of energy bought up recently. Enleak Midstream, New Star Energy, Shell Midstream, Enable Midstream, Genesis Energy, Phillips 66. This is not a coincidence. So hopefully these resources help you in your DD. Again, I wouldn't really trade exactly what they're trading. However, I would incorporate this along with my other due diligence, unless I'm tracking Nancy Pelosi herself. In that case, I just look at what she's doing and blindly click the mouse button and just buy everything she's buying. All right, so the really big news for this week is obviously avoiding a government shutdown. As I said in my last video, the last time we had a government shutdown, we hit near bear market status. Now, as I said at the outset of the video, it's not all doom and gloom. Just like with the Fed raising rates, a government shutdown does tend to have a very short-term shock on the markets, but in the long term, it does not seem to affect the directionality. If you look at the average S&P performance after government shutdowns, 1 month later, we're up 0.2%. 3 months later, we're up almost 2.5%. 6 months later, we're up almost 4.3%. So it looks like just business as usual. Like most binary events, it's just the initial shock, which tells me or reaffirms why I never really stay divested from the markets. I'm almost always 100% invested, obviously with different distributions depending on what's going on. All right, so the Senate reached a deal to avoid a government shutdown, but of course it has to pass the House. Now, I don't want to get too much into the minutia. However, Democrats were trying to pass a spending bill along with avoiding a government shutdown and raising the debt ceiling, and Republicans did not want those things tied in together in one vote. They did want the Democrats to split that up. So now that the Senate isolated a deal just to avoid a government shutdown, the Republicans are more likely to vote for it. Now, because of that, before market close yesterday, I actually sold a put spread, which is a bullish position, against the SPY at the 437, 436 level, which means the SPY has to be above 437 by Friday for me to get max profit of 100%. And if you want access to all of our trades, link is in the description below. We also had puts on CRM, which is Salesforce, that we closed for 91%. And in terms of our other hedge, which was against the NASDAQ, we were up 98% before closing that position. Now, I do have a hedge against the Dow Jones that is currently down, but I will leave that open just in case we do see a market downturn. Another thing that can rattle the markets and bring in some volatility is the jobless claims as well as GDP data, which is crazy and ironic that it is due on the same day as potentially an infrastructure bill vote, as well as a vote to not shut down the government. This would actually be the perfect day to day trade VIX options, VIX being the volatility index. I bet you that thing is gonna look like a heart rate monitor all day depending on the news. And then obviously we have the Evergrand situation. They do have another coupon payment due this week that looks like they will default. Remember, they didn't pay the one from last week, and if they miss this week's, then that'll be 2 payments that they're behind on. Obviously, they have 30 days in order to make that payment. However, more and more, it looks like the Chinese government is not going to bail out Evergrand. What they are doing is swallowing up some of its assets and forcing it to sell its other assets to other companies. But it does not look like the company itself is going to get bailed out by the Chinese government. Very ironic that China is actually running a true form of capitalism, whereas in this country, we've gotten in the habit of bailing out companies that are too big to fail. So in summary, all eyes are going to be whether the government's going to shut down, whether the infrastructure bill is going to get passed. We're going to have a view on the newest GDP numbers as well as the jobless claim numbers. And to be honest, this is a moment of truth, at least in the short term, because if any one of those things falls on its face heavily, then we could see the indices go down to the next level of support that we haven't seen yet in 2021. The S&P, NASDAQ, and Dow Jones can easily fall back to the 200-day moving average, and at that point, it is another wait-and-see game. Additionally, because earnings season starts next week, now we've seen record earnings in 2021. However, if the next round of earnings is worse than the previous round of earnings, that is a major sign that the economy is slowing down. And in my prediction, we will start to see some slowdown in earnings, especially because every single industry right now is being rattled by supply chain constraints. Even Jerome Powell talked about how that is something that he didn't expect. There's an insane amount of demand in almost every single industry. There's a ton of helicopter money thrown around, and there isn't enough supply in order to make the products that people want to buy. I mean, any of you that tried to buy a car recently know this. The next round of MacBooks and iPhones will likely face supply chain problems, and it really trickles down among almost every single industry that has to do with manufacturing. Anyway, traders, that is it for this video. If you got anything out of this video, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know what stocks you are trading. Let me know what you think of the economy, what you think is going to happen with the debt ceiling, with the government shutdown, etc. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.